Welcome back. We're getting back to the big global story, and that is trade deals that the U.S. is signing and perhaps all set to sign. Now, we know that one has been announced between the U.S. and Vietnam overnight. Of course, we are keenly awaiting developments on the India-U.S. Trade agreement. Donald Trump yesterday announced that Vietnam trade deal. Maybe it gives us some clues into what the alignment with India could look like. Though, of course, it's very specific bilateral agreements that the U.S. is going in for. Indian exporters perhaps could be looking at higher tariffs. We still have sticky issues around areas like dairy and agriculture. Let's talk about this and the implications for Indian exporters. We have Ajay Sahai, FIEO Director General and CEO at the Federation of Indian Export Organization. We also have with us Abhijit Das, international trade expert and former head of the Center for WTO Studies. Gentlemen, thank you very much for joining in. Abhijit, if I could open the floor with you first, and let's start with what we can infer or take away from the way the US-Vietnam trade deal got done. I mean, they started with 90% tariffs, they've ended at 20%, and they've tried to plug the leakage areas, which is this, the tariff to plug any kind of transshipment, which is happening via Vietnam as well. Let's look at the implications for India here. Now that Vietnam doesn't seem to be getting a very raw deal, would you say it's bad news for, say, Indian textile exporters?
First and foremost, it's not entirely correct to say that Vietnam is not getting a raw deal. Let's bear in mind that before the Trump reciprocal tariffs were announced, Vietnam was benefiting from a significant access into the US market at preferential tariffs. So even if the deal which was announced last night, even if it's implemented, it would still be a setback for Vietnam. So let's bear that in mind. Coming to the aspect of what can our exporters expect, the key point over here is that when the reciprocal tariffs were announced in February earlier this year, there was some optimism that Indian exporters would face 26%, Vietnam would face 46%. And there was some optimism that our exporters might increase their share in the US market. Now, that was subject to many caveats and constraints. And I, for one, never really believed that really because of higher tariffs on Vietnam, we would have a huge export opportunity opening up in US. Now, what the recent announcement of the deal between US and Vietnam has done is it has certainly dampened that optimism. Having said that, this should not be a trigger for making sure that India and US come to an agreement immediately before 13th July. To my mind, the real determining factor will be agriculture, and we will have to see how positions on agriculture are accommodated. And that, to my mind, will determine whether we have a deal or not. And if we do end up having a deal, maybe our exporters, even in textiles and clothing sector, might be able to enjoy some benefits compared to Vietnam.
Ajay, any lessons India can draw from the US-Vietnam deal? And secondly, as my colleague Surabhi was also asking, particularly on exports, where India directly competes with Vietnam, what could be the impact on India as things stand right now?
In fact, I consider it a very positive development. The very fact that US has carved out a deal with Vietnam after doing one with UK shows their willingness to engage with other countries. And since India is proactively engaged with the US, we can look forward for a deal. Secondly, we are now very clear that Vietnam will have market access in the US at a minimum tariff of 20%. If we work out a BTA where we get zero tariff, we will have 20% advantage. Even if the reference tariff of 10% remains, we will have 10% advantage. So this will be very positive for India. Now, if we look into the products, in fact, India's export to US in the calendar year 2024 was around 80 billion. Vietnam was in 110 billion, and we are competing in many of the sectors, including electrical and electronics, machinery, apparel, in particular furniture, footwear, saddlery goods, rubber goods, plastic goods, automobile and auto component. And therefore, in these segments, if we enjoy a tariff advantage of 10%, which happens if we work out a BTA and even if the 10% tariffs remain, it will be a huge gain to India. So definitely we can look forward for that gain. I'm pretty sure that a lot of US companies who are looking into India for export, a lot of them are relocating from Vietnam and China also. They will definitely move towards India. Let us bear in mind that one of the reciprocal tariff fallout has been that global companies are looking into setting manufacturing base in a lot of countries. They are already in China and Vietnam, and therefore they look forward for investment in India in a big way.
No, but we have to see, Mr. Sahai, I take your point completely, but those are the things that we'll have to see. This separate transshipment tariff, whether something like this gets walked into the contours with India as well, because we know, Mr. Trump has been very vocal. For instance, he's called out the Apple CEO saying that you are making your phones in China. Now I hear you want to make them in India and then bring them to the US. Doesn't fly. And then separately, we've seen the reports just over the last 24 hours, right? Foxconn sending a lot of its engineers back, etc. So we need to see how this...
He has not clarified on transshipment. The general impression of transshipment is that if the goods of third country get routed through a country which is having preferential tariff, you try to circumvent those provisions. So in fact, this also infers that US is not looking into duty beyond 40% on China and ASEAN, because if China and ASEAN goods are allowed transshipment to Vietnam, not subject to 40%.
40%, which should be the duties in line for China that they're speaking of. I take your point. Just a clarification, Mr. Sahai, like you mentioned, that, even if the duty on a lot of items that we're exporting to the US comes at 10%, and you named a lot of items, textiles, electronics, maybe even furniture goods, etc., there will be a differential. What would be the average blended tariff on some of these items now for us, for our exporters, as they were being exported before Liberation Day? Just to understand what the increase will be, assuming we remain at 10%.
On the most of the items, the tariff in the US was in the range of 2 to 5%. Thereafter, now we have moved to 10% reference tariff. I'm not sure when we are negotiating the VTA whether MFN will come to zero. Reference tariff or 10% will remain, because US has collected over $300 billion of duty in a single month, and probably in that way they may not provide exemption to reference tariff. Even they have not provided to UK. So I'm basing my assumption that if MFN becomes zero, reference tariff remains at 10%, Vietnam will be having 20% duty, we will having 10% duty. If reference goes, Vietnam will be at 20% duty, we may get zero duty.
Oh, that would be sunny skies.
All right. Mr. Das, wanted to get your thoughts in on this rules of origin restriction, the punitive tariff of 40% on transshipped good. If that is a part, is a part of the India-US deal, how will it impact India and Indian exporters?
There are two ways of looking at this 40% punitive tariffs on transshipment. One, of course, is it will prevent countries from circumventing the tariffs which they might themselves face. And over here, China is an obvious target. Other ASEAN countries could be equally on the radar screen. But there's the other way of looking at it. While we are awaiting the fine print, the legal details of how this 40% tariffs will be calculated, what will be the rules of origin, if it's purely based on transshipment, I don't think we have anything to fear. However, if the rules for the transshipment suggest that if you're importing parts and components or inputs from China, and if that is treated as transshipment, then I'm afraid our exports in the sectors of electronics and pharmaceuticals, they may be at the crosshairs of this 40% tariff.
Yeah, that's a great fine point that you've raised, Abhijit, that we need to see that even if the components or the APIs for pharmaceuticals, if they start getting counted as transshipment, then we could be in for a lot of complexity. Very quickly, last 30 seconds, Abhijit, on this. End by telling us about the core sticky point. We know that agriculture and dairy is where things have been stuck. The Americans want to come in. They say we need complete market access, remove non-tariff barriers, allow us to come into your market and compete. What is the workaround, or what would you expect? What kind of a different deal would you expect, which the US president has spoken about?
What we might think of in terms of a landing zone is, while we will not allow GM products to come in, there could be some concession to the US in terms of more predictability in terms of timeframes within which we will take a decision on whether to allow GM products to come in or not. On key sticking agriculture products, maybe a possibility would be something called a tariff rate quota, whereby we allow imports of some agriculture products at lower tariffs up to a predefined quantity ceilings. So this could be one option, and maybe this might be perhaps the only viable practical option which protects our domestic interest as well as gives some market access to the US in the agriculture sector.
All right. That's a great perspective to have as we look at the final contours and maybe an eventual announcement of the India-US trade agreement. Thank you very much, gentlemen, for joining in and giving us your views. And with that, it's curtains on this edition of Bazaar. Thanks for watching. Chartbusters coming up next.